Right, guys. Well, it's good to see you all in the room, and let's get started. We're just looking at a chart of pound against the dollar. Perhaps you could just a yes, just to finally confirm, a Y in the little chat box to confirm that you can actually see and hear me. And then, once we've got that, fine, brilliant. Ian, good to see you here. Mish, excellent to see you in the room. And my goodness me, yeah, Sharon, Peter, Thomas, Dennis, good to see you here, Dennis. Right, guys. Well, what we're going to look at this morning is something that we've looked at in times past, but it's all still totally relevant, and that is contra-think. That is to say that whenever the majority are thinking of trading in one direction, then I want to be thinking about trading in the opposite direction. Now, one of the big problems with contra-think is that we are all social beings. We are social animals, and we do not like to go against the grain of what popular opinion is. Particularly, you know, if you're just observing a group of people in some form of gathering, there tends to be a sort of dominant talker, if you like, or a dominant sort of personality in that group, and then the rest of the group tends to sort of go along with the person's point of view. And, you know, every now and again, you'll get you'll get somebody who's a rebel who'll actually stand up and say, no, I don't agree with that. And they'll go off and do their own thing. The majority do tend to want to follow the majority. Of course, you can observe this in all walks of life, from boardrooms to you know, public bar. So that's where we sort of start from, and consequently, people will follow gurus, and they will follow what goes on in the newspapers. They will follow what goes on Bloomberg, CNBC, the talking heads. And there's this sort of great misconception that there are experts out there. There are experts who know what they're doing. And the popular belief is that all we've got to do is to find an expert and follow the expert, follow on their coattails and do what they do. But in my experience, then how do you actually find an expert? Because who actually defines an expert? I've sort of variously heard an expert described as being, well, X is the unknown quantity, and a spurt is just a drip under pressure. Now, that's probably being very unkind to all the experts out there. But experts occasionally will get it right. But majority of the time, as we find in the world of trading, then those experts with a following, and the following just gathers momentum and starts to move off in one direction, and quite often that direction is actually the wrong direction. Now, if we just take a little glance at cable, what's going on with cable? Well, we've got a daily chart, just take a little glance at daily chart. And what we've seen is that cable, over the summer period, certainly since around about sort of June, July time, well, July, the end of July, it was moving down. And I had all stacks and stacks and stacks of, well, I say stacks and stacks, a good sort of 5 or 6 emails coming from traders that, you know, I sort of will occasionally sort of listen to and so on. But they were all telling me that and this was almost to a man, that cable was finished. It was going to collapse, and we would see it just going on down forevermore. And they were sort of suggesting to me that it was going to drop from this 150 level, that it would drop down to, well, lows that it's been down to sort of 140, and even lower. Well, there were a lot of people jumped on that particular bandwagon, and then what did we find? That it went up, and it kept going up, and it went through 1,000 pips. It went through 1,200 pips. So what can we use to get a handle on what the majority are doing? Well, that's relatively simple because it's all published, and it's all published through the COT reports. Now, what is the COT report? Well, let's just pick one of these up. Give me a second. Let's see if we have got this. Yeah. We can actually just bring along. And there we go. That is COT report. Now, it's published. It's published at the end of the week. It's published late on Friday. And it lags in that the data is made up to the previous Tuesday. So there's always a little bit of a lag with it. So it's quite useful for longer term traders. It is less useful for intraday traders. That said, provided that one knows what the general position is on the COT report, those shorter term traders can actually use this in the back of their mind as something which will just give them some guidance as to where the balance of power is. Is it with the buyers or is it with the sellers? Now, one of the problems with this little report is that you've got to just delve into it somewhat. And if you just sort of look at this one, we've got this, let me just move it ever so slightly. There we are. We'll put that mid-screen there. We've got this sort of Euro FX, and then above that we've got the yen, and it tells us what the number of contracts, and this is, let me just mention right away, this is based on the futures market, okay, so this is the futures market reporting. It is not the spot market, because the spot market does not have any central clearinghouse that can actually report all this data. So it's all based on the futures market, where there is a regulated exchange. And of course, all of this information can be noted. So what is open interest, I suppose, is one of the questions that needs to be answered. And open interest is quite simply the number of contracts which are open, as in, trader A may well have bought a contract, okay, and that contract is open until trader A sells it on somewhere else. So there we go. We may well have, say, 100 traders who have all bought and they are all long, and no traders are short, in which case then we've got 100 contracts long, okay, and that will show that we've got that big imbalance. Now, on the other hand, we could have not only that 100 traders long, but we could actually have 100 traders who have actually also gone short. So we've got 100 long, 100 short, and the net position is 0. So we've got no big imbalance in either direction. In fact, that's rather suggesting, a bit like a doji. It's suggesting there that the market just doesn't know quite which way it's going to go next. However, there is an easier way that we can look at these, and the way in which we do that is to look at this histogram. We can look at this histogram. Now, this is published by the CME Group, publicly available, and it's really quite handy in that for FX traders, then we've got the major FX pairs across the top, the major FX futures contracts across the top, and we can display this in several different ways. We can look at dealers, we can look at asset managers, we can look at other reporting, which are quite small players in the market, and then we can look at leverage money. And it's the leverage money which is the most useful one to look at. It's the most useful one to look at because these are the people who do not want to get it wrong too much. If they do get it wrong too much, then they're clearly going to lose a lot of money. And any trader who uses leverage money, possibly the majority of us do in this room, then when it goes against us, it can cause us a fair bit of damage. When it goes with us, though, we are going to be making an awful lot more in terms of return on the capital that we've got employed than the non-leveraged people do. So, why am I saying leverage money? Well, surely because these are the people who are going to be on the edge of their seats, not wanting the market to turn around and cause them a problem. So, how are we reading this? Dead simple, dead simple. We've got blue and we've got orange. You look down the little legend at the bottom, we've got long GBP in blue and we've got short in orange. So, where we've got, as we have of this last period of reporting, which was on the 5th of November, we've got many more contracts which are long, that are still open and have yet to be closed, than there are shorts in the market. So there's an imbalance. There's an imbalance. And the imbalance then is suggesting that the majority of people are long, and consequently one would assume by that then that if they're experts out there, then they got it right and they're moving ahead. We just move that to one side for the moment. We'll see the chart behind it, and we look at the period immediately prior to November the 5th, which is just about in this region. In fact, let's just put a line across, down, bear with me a second. And if we even go back a little bit before that, we can see that the one immediately prior had a massive number of longs in relation to a number of shorts that were pretty stable actually at that time. And that was on the 23rd of the 10th. Let's just that in the right place. 23rd of the 10th. There we go. That there. That one more. That was the high of the market. So there we are. The market got up to 162, did a double top, and then it retreated on down. Now, what we're going to actually see is that the one that followed that then, this most recent one, shows quite clearly there that the balance sort of shifted back a little bit. We've got fewer longs and we've got a few more shorts. So we've got some of the traders who actually cotton on to what was actually going on here with the move on down. But we've still got the majority long. So one way of actually reading this, and we read it the sort of the opposite way round, if you like. We read it so that we're looking at it with the contra-think spectacles on, is that whenever there is a big imbalance between the number of longs and shorts, then the assumption is that they've got it wrong and that the market could well be due for something of a correction. So there is another way also of reading this, and that is to say that is to sort of get yourself into the thinking mindset that if the majority are long, and if we look at the overall open interest, and this little green line actually shows that, so that's the overall number of contracts in the market which are still open, and if it's at a relatively high level and the imbalance is very, very high, the question then is, who else is there to keep buying this market? Okay. So if we find that the majority of participants have actually already bought this market, it must mean that the pool of available traders to keep buying is now pretty small. So if it's pretty small, then that suggests that we are at a peak. So that's what we sort of read into that big imbalance. That's what we read into the imbalance. Right, now, let's just change a chart for a moment. Or at least an interpretation that can be put to it. Let's go back to the first one. That one is around about the 27th of May. So, we'll look at this again, and we'll find that period of the 27th of May, and actually that's the 28th of May, and it's this big one where there is a peak of the orange. So that shows that the majority, okay, in that preceding week, were actually short, okay? And we've just got a small number long. So it's the sort of more or less the exact opposite of the example we've just been looking at. So what we've got then, we've got this majority then, this majority who are short. Let's compare that then with the chart. Look at that. They're all short. They're all short. And what we find is that the majority seem to get short when the market is just about to turn. And that's exactly what did happen. It turned. It turned round. So the leveraged money have got it wrong again. Those trading experts have got it wrong, and the market then is on the turn. So we've got a little system here that we could use. Whenever we've got a big imbalance, we can switch around. And we can do the opposite to what the leverage money is doing. Right, now let's look at the next vertical line. Next vertical line then. Okay, that one is in June. All right. And let's just bring across around about 18th June. Let's see what we've got just down here. And what we've actually got is that imbalance of being massively short is now getting itself well and truly unwound. So we then get down to this little section where we've still got a fair number of these traders who are short, but they're really coming together. And that's what happens just down here at the bottom. We've got there between the 18th and 25th, we've actually got not quite balance, but it's sort of starting to get a little bit close to. Back to the chart again. What we find is that at that level, that was the precursor to a major fall. And bringing this back on, we can see then that the market actually cottoned on to what was going on, and the number of longs started to subside, and the number of shorts actually built up. So look at the next one, and that's picking out a low there, okay? And that's picking out a low on the 9th of July. So we then got a changeover with price sort of starting to take off. Then eventually, well, let's just take a quick glance at this one on the 30th, and we're now starting to get pretty well close to crossover. So eventually, the market started to get it right. I'll just run this right the way to where we were. Eventually then, we get to the peaks in the market at 162, and those peaks were coincident with those peaks that we saw in the number of longs in the market. The imbalance is too large to sustain. It becomes unsustainable, and consequently, we get the market just rolling over. Right, okay, so that's just looked at cable. Let's take a look at the euro. Now this one, I've got a whole series of lines. I've got some harmonics on here, so let me just tidy this chart just a tad. History. And if we look at this vertical line that I've put on here, as we know, the euro has taken a tumble in the last sort of week or so. Got itself up to 138, found that that was just altogether too much for it. And what we've seen is that, again, we got the majority of longs, minimum number of shorts in relation to the longs, and then prices just rolled over. Sorry, I missed a couple of questions there. Let's just have a look at a couple of these. Fine. Great stuff, Ian. Marvellous. Got the link on there. Yeah, you got it. It's the non-commercials. It's the leveraged money. It's the people who are in the game for short-term moves. And they're the ones who tend to get it wrong more often than they get it right. I mean, they do get it right at times. I mean, there are times when we do actually see the market going with the majority, but more often than not, it's actually the other way around. Yeah, quite right. In fact, the information, this is just the CME. We're obviously looking at Forex at the moment, but all of the exchanges do report in the same way. They have to. It's a legal requirement. And, if you're trading, say, the dollar index on the ICE, the ICE exchange, etc., you've got this information. You might be interested in commodities, for instance, and the commodities that I covered. Well, it's every commodity that's traded on the futures exchange, and those people who are into agriculturals will actually follow this. They will want probably a little bit of specialist knowledge on what is going on with sort of crop rotations, on crop months and so on, with new crops as opposed to old crops, etc. But you've also got it for the metals, gold, silver, and so on. So the information is available for all of the markets. So how do you know when the imbalance is too much? Well, you then start to look at other things as well. And by combining what is going on with the COT position, it's giving a fundamental snapshot of what is going on with the majority then of speculators in the market. We can then link that to the charts, and behind here I use a whole variety of things to assist in the process of deciding what is going on with a market, from harmonics through support resistance to doing a little bit of basic candle analysis. By linking it together, the COT can be a very, very useful additional tool. So let's just look at one or two other of these little areas where we've got these crossovers. You will note that most of these vertical lines coincide with reversals. And it's the reversals that I'm really most interested in looking at, because reversals so often will occur at previous reversals. And we can see that the reversal in May was followed by a reversal at a similar level in July. The reversal in June was followed at a similar level by a reversal in August, and so on. Yeah, absolutely right. Absolutely right. Yeah, it's something which will just give you the heads up to what just might be around the corner. And to, as the tool is there and it's freely available, then there's absolutely no reason why we shouldn't actually be using it and looking at it. So I'm just going to go and take a look at this example on the 25th of May. Let's just bring this one back. And around about the 21st to the 28th of May, what have we got? Big imbalance, okay? That's where the majority was short. And that was just the time when what we really should have done was to actually reverse the position. Now, there is another way of using this chart, and it's crossover. Now, we're all sort of familiar with indicators, moving averages, etc., that cross over. Well, if we just look at what is going on with the COT chart at the moment, we've got massively short, okay, slightly less short, then we've more or less, on the 11th of June, we've got more or less balance, okay, more or less balance. And then we get the crossover when it flips now, the majority are long. The majority are long. And it's just about that time on the 18th when the market also flips over and decides to move south. So you can actually look at the plight of some of these Joe Soap traders who are actually in here. All the way up, okay, they were short. And then the market actually turns over with a neat little engulfing day, by the way. Just throw that in, bit of candle analysis. And that's more or less at just the time when we get the flip over for people going long. And why is that? Well, quite simply, it is herd mentality. It is the majority of people going along with the majority of opinion. Market goes up, it's usually towards the end of the trend that the majority jump onto the trend and get in too late. Just when they should really be doing exactly the opposite. Just when they shouldn't be getting in on that trend, that's when they do jump into it. And then, of course, as we've seen, we can get crossover and it flips the other way. Again, they are wrong. These leveraged money speculators tend to be wrong the majority of the time. Right. Okay, folks. I'll leave you to play a little bit more with the euro. Let's look at one other, which is usually a reasonable one for following all of these rules. And we've got a real interesting chart pattern building up. Again, let me just take off the harmonics for a moment. So we've got a slightly cleaner chart. Now, the Aussie is a really interesting market in that they have benefited fundamentally from China. China's been sort of taking a lot of their raw materials, and then when we start to find that China has got more roads than they've got vehicles to put on the road, they've got more blocks of flats and towns than they have to actually have people to fill those flats and towns, that it all started to unwind for the Australians. And it's been running in a downtrend, well, right the way through for just over half a year. We look back to this date in April, well, April the 16th. Then right to the left-hand edge of this chart, we can see, once again, the majority are long. Okay? Big blue candle there. Blue histogram, I should say. And the number of shorts in relation, considerably less. So we follow the rule of where we've got a big imbalance and the majority are long, let's do the opposite thing and sell. Sell. Now, I put a line down here on the 24th of May. Just bring this back over to the 24th of May, and we've got crossover. So at that time, the number of longs had been still pretty substantial, but unwinding, but still the majority are long. And it's right way down here, but it then flips over so that the number of shorts now starts to increase in relation to the number of longs. So the market is now starting to get it right. They've seen what's going on with the trend. They realise it's going down. And those speculators now, the majority of them, are on the right side. And they get a run. They've missed out on half of it, of course. It runs on down. Right, then on the 30th of June, we look at what went on the 30th of June. We've then got the majority who are short. We've now got, okay, we've got a relative spike. We've got the majority who are now short on this market. And lo and behold, they were right, briefly. Then we've got a big rally moving up from that sort of important round number level there of 90. And it moved up in a beautiful little five-wave move. Notice that all the time that we actually had that rally, we have still got the majority short. So out there are an awful lot of speculators who during this rally, this sort of late summer rally, they were wrong. The majority were short through this. The majority held on to their shorts, and, you know, if they held them, well, probably now they're starting to feel a little bit vindicated. But the majority of speculators missed out on that major summer rally. So there we go. Panel part, I think you've said it all there. You've said it all. Right, okay. You know, if you're into the Russian ruble, you're into the Mexican peso, you've got the information there as well. Probably trades that we don't sort of take very often, but it's certainly got those majors that we are going to be looking at sort of most of the time. And I'll just come back to the point I was going to make, but we just stay with this Australian dollar for half a moment. And what I'm just going to mention is that we've got a number of things that we can actually look at here, as well as just purely looking at what's going on with the COT. So right the way back over on the left, what we saw then was the market that was getting itself pretty well mature, and over a period of time, over a period of months, there was the start of the downtrend. And this is one of these little areas of consolidation, and it slopes. And it slopes in the general direction of where the major move eventually got moving. Now, there wasn't a great deal of downside momentum in the months around about the change in the year. So it was just a general slope. Those general sloping movements quite often will actually break into a major downside run, as did happen. If we now come right the way back to where we are, what we've seen is a neat little correction, a potential correction, an ABC type correction after a very neat and tidy 5-wave upward move that came to an end in this sort of band of resistance with an engulfing candle. And so the question is, what's going to happen next? Bear with me half a moment. Let's just switch this to. But what then follows is an ABC correction. We've actually had an A and a B, and what we're in at the moment is a C correction. If we look at for our chart, and just put a little bit more data on the screen, where price is right now, it's picking up some of the important harmonic levels based on previous lows and based on extensions down from previous lows. And they're all come together in this general area just north of this 93 level. So my question is, would you want to be going heavily short now on that Australian dollar, given that we've got a chart which is suggesting that it just might want to put in something of a reversal here? So there we are. That's taken a little glance at Australian dollar, which just might be in a region where it could be possibly ready for some form of move back up. Now, if we go back to the COT, we haven't got any major imbalance here to actually back that up. Now, what would have backed that up is that if the number of shorts was massively high, then that might just have been a slightly different story. So we haven't really got them at the moment, COT report backing that up. So I shall be watching this report very, very closely when it comes out on Friday for trading up to today, because that just might give me a little bit more of a heads up as to what could well be going on there. Right. Now, the point that I was actually going to come back to a little earlier on is that where we've got the US dollar as the secondary currency, as in the AUD USD, you can just read the charts very straightforwardly. However, there are some of these where it works the other way around, such as the Canadian dollar. So let's go and look at a chart for the Canadian dollar. Harmonics for a moment, as that is not today's topic. But certainly, if you want more information on harmonics, do get in touch with me. Only too pleased. Interesting, Joe? Yeah. All right. Dhruv, yeah. I mean, just to recap then on that, when the longs and shorts cross over, look then for, again, a possible reversal. That is a potential reversal point when they cross over. So see what is going on the chart. If the chart has been moving in one direction prior to the crossover, then you get the crossover. Look for the potential reversal of that previous move. So that's the way I look at that. So I'm using the crossover in much the same way. Yeah, of course there are always exceptions, but generally speaking, the majority of the time, there are always going to be exceptions to absolutely everything that we trade. All we can hope to do is to try and get the odds slightly in our favour. And if we can do that, only slightly in our favour, then we've got something which will help us along. I'll come back to that point, Mr. Sue. We'll actually go back to that actual chart, but just before I do, I just want to point out that when we're looking at the spot market, then the spot market for the USD CAD is plotting what is happening with the US dollar. It is the US dollar, self-evident really, against the CAD. However, in the futures market, if we would trade the futures contract, then what we're looking at is the Canadian dollar, okay, the Canadian dollar against the USD. So in the futures market, we're effectively reversing USD CAD, looking at CAD USD, right? So the way that we would look at the COT report is that we would look at it the other way around. Now, if we just go right the way back to, in this case, it's the 16th of the 4th, where we've got a big imbalance there. So we've got a lot of people who are short the CAD at that time. A lot of them are short the CAD. So to look at it on a spot chart, we're looking at it the other way around, okay, that they are long the USD CAD. Okay. And there we are on the 16th, thereabouts, which is just about there. The majority were long, and we then started to get a little bit of a move back down. So I just really wanted to point that out to you, which will be obviously obvious when you start to look at these. Right, let's just go back to we'll just go back to Euro for a minute and look at the crossings, the crossover. Right. Right. Now, on this one, what we can see, this is the Euro COT, and over here on the left-hand side of the COT histogram, we've got the majority short, okay? We then get that imbalance, that big imbalance there on the 21st of May. Then after that, the number of shorts start to recede, okay? It starts to recede. The number of longs actually receded as well, but then we start to get a plateau on the number of longs whilst the shorts are still coming down. Then the very next one on the 11th of June, we're just about in balance, and it's then the next one on the 18th where we've got the crossover. And the crossover is that the majority of shorts has given way to the majority of longs. And that happened there on the 18th of June. And looking back on the chart, the 18th of June, okay, it's the second vertical line from the left, and that is also the time at which the market flipped over from an uptrend to a downtrend. There we go. So that's what I mean by what's got and what. And I mean, that was a pretty good example. But, you know, hopefully I've given you a little bit of food for thought, guys, that you can look at this and use it in relation to your charts and just see if you start to get any little sort of inkling of what might be going on. So the answer is that no, I haven't done any statistical work on this. It may well be that some have, and you know, you might want to do your own work on it. But to my mind, it's one of those things which, when you start to think about it, it becomes pretty obvious that if you've got the majority of people who are on one side of the market, then, you know, the chances are, who is left to keep powering it in that self-same direction? Well, you know, they're already in the market. So when they're using leveraged money and the market starts to go against them, they have got to get out quickly, and they will really fuel the move in the other direction. Now, in terms of, yeah, I mean, Alexander, look to become contrarian after any big move on the trick. Would it be 600, 800, 1200 points? Well, exclamation mark over that. You never know. You never, ever know. All you can do is to trade very, very conservatively and get the stocks to break even pretty quickly. Now, just as one little aside, which I will just mention to you on a market that seems to work reasonably well some of the time, and that is this one. Beautiful breakfast trade this morning and a beautiful cable news play, which is one that my members are actually playing with at the moment. And over the last few months, the cable news play is now up just over 50%, 50.7% as of today. Okay, guys. Well, I think my time is up right now. Good to be with you, and hope you found it useful. Hopefully see you again next month. Do get in touch if you want some further information on these bits and pieces.